Dear students, welcome to our channel. In this video, let us discuss few practical problems in the Accounting for Partnership Firms Fundamentals Chapter 1 for CBSE Class 12 Accountancy. In our previous video, we discussed few basic concepts. I have given the link of that previous video in the description. You can have a glance over that video. Now let us start discussing few basic problems in this chapter. Now let us discuss a new concept, estimation of opening capital. This opening capital estimation is needed to calculate the interest on capital. Every partner are entitled for the interest on capital, and it is calculated as a percentage on the opening capital they had during a particular year. Let us, instead of memorizing the format, let us discuss a small situation. Say for example, you had rupees 500 in the evening and you spent during the day rupees 100 for buying an ice cream, and your friend gave you rupees 200, but you do not know how much money you had in the morning when you started from the home. You do not know how much money you had when you started from the home. Let us do a small calculation and find out. Then we will match it to the real situation. Say, money you had, you are interested to know how much money you have with you when you started from your home. Money in the evening. It is rupees 500. With this, you add that you spent for ice cream. If you would have not spent for ice cream, this money would have been with you. It is rupees 100, so it is rupees 600. And your friend had given you money from friend. Your friend has given you rupees 200. If you would have not received 200, this money you might have not been having with you. So it is where you deduct this 400. This is a gift that you received from your friend. So money you had in the morning was rupees 400. Let us rework this and verify our calculations. Let us say, for example, you know the money what you had in the morning. Money you had in the morning, that is rupees 400. You know how much money you had in the morning. With this, you had the money from your friend. With this, you had this money. Your friend gave you 200, and you deduct the money spent for ice cream. That is rupees 100. So 600 plus minus 100, you arrive at rupees 500. This is the money you had in the evening. This is the money you had in the evening. Money in the evening. So morning you had 500 and you arrived it as 500. In both the situations, the calculation value is same. Let us match this situation with a real corporate situation, firm real-time situation, a corporate scenario. The money you had in the evening, this we will understand as the money we had in the evening. We will understand it as a closing capital, or money at capital at end. And money you spend for ice cream, this is for your personal use. So we will understand this as drawings. And money you add this, and the money that you got from your friend, we will understand this as profits. Profits, you got a gift from your friend, we will understand this as a profit or additional capital. And when we deduct this, we arrive the money in the morning. That is the capital in the beginning. Instead of memorizing a format, you understand the situation, you recall the situation, you can very well arrive the capital in the beginning. Now let us solve a small question in this. A and B are partners in a business, and we are given with the capital and other details. As usual, once you read a question, try to break it into small hints. A and B are partners in a business and their capitals at the end. We are given with capital at the end. Capital at the end of the year were 7 lakh and 6 lakhs. And we are asked to determine the opening capital. We are asked to determine the opening capital of the for the year. And drawings of A and B were given 75,000 and 50,000. And one person introduced a capital. B has introduced a capital during the year 1 lakh. Interest on capital credited to A and B were 15,000 and 10,000. Interest on drawings for A and B were rupees 7,500 and 5,000. Share of profit for each partner rupees 1 lakh. Break down the question into small hints. This will better help you to navigate the given situation. Now, estimation of closing capital. We want to know what is the capital, estimation of opening capital. Estimation of opening capital. We want to know estimation of partner A, partner B. Opening capital we have to estimate. As usual, first capital at end. Capital at end, this partners had, one partner had, partner A had 7 lakhs and partner B had 6 lakhs. With this, what we do is we will be adding the drawings. For partner A, the drawings is 75,000 and for partner B, the drawings is 50,000. And we add the interest on drawings. Interest on drawings. For partner A, it is 7,500. The drawings, you recall the situation of ice cream for your personal use. This is 5,000 and you add it, it is 7,82,500. It is 6,55,000. From this, you deduct the additional capital. Additional capital. That is, first person, partner A, did not introduce any additional capital. Only partner B introduced an additional capital amounting to 1 lakh. And the interest on capital. Interest on capital for first partner, it is given in the question as 15,000 interest on capital, and for the next person it is 10,000. Then share of profits, the gift that you received from your friend. Share of profit, the share of profits 1 lakh and each partner received a share of profit of 1 lakh. So when you consolidate all these things, you will get for partner A 6,67,500 and for partner B 4,45,000. This is the capital in the beginning. We started with the capital at the end and we arrived the capital in the beginning. Next question. R and N are partners in a firm with the capitals of 2,50,000 and 1,50,000. We are given with some other details and we are also asked to calculate the interest on capital. Now, as usual, what we will do is we will break the question into small details. R and N are partners and their capitals as on 1st April was 2,50,000 and 1,50,000. They share profits equally. Whenever in accounting subject you want to solve any problem, divide the main question into small hints and this will be very useful in solving. On 1st July, the capitals, they decided to alter their capital. By that, on 1st July, they want the capitals to be 2 lakhs. So, adjustments, they plan to do the adjustments, that is, adjustments to be made by either introducing or withdrawing the capital. And interest on capital allowed is 8%. We are asked to calculate the interest on capital as on what date? That is 31st March 2023. Opening balance of the 1st April 2022, 2,50,000 and 1,50,000 as the capitals. And as on 31st March, the interest on capital. We discussed interest on capital is an income for the partner and expense for the company. Let us draft this timeline. Let us draft these details in a timeline, that is 1st April. That is 1st April. What we will do is we will first fix a timeline for this on 1st April, and what is that? 1st July they want to alter the capital, and as on 31st March they are interested in finding out the interest on capital. So let us fix the question by this, that is on 1st April. 1st April 2022. Capital of M is rupees 2,50,000. 2,50,000, and for N the capital is rupees 1,50,000. What they decided is on 1st July. On 1st July 2022. They want to alter the capital. Both of them want their capitals to be rupees 2 lakhs. Both of them want to maintain a capital of 2 lakh. M and N. Both of them want to maintain the capital as rupees 2 lakhs. That is date of on the first date. That means what? M can withdraw an amount of 50,000 and N has to introduce a capital of 50,000, so that make his capital as 2 lakhs. And as on 31st March, as on 31st March 2023, they decided to calculate the interest on capital. Interest on capital at the rate of 8%. At the rate of 8%. So first from April to March, the duration is how much it is? 3 months. And from July to 31st April to July, its duration is 3 months, and July to March the duration is 9 months. 9 months. The details we have fixed it in a timeline. Now we will start calculating the interest on capital. Estimation of interest on capital for Mr. M. First we will fix it for Mr. M. From the timeline it is clear that for 3 months Mr. M is holding, that is from 1st April 2022 to 1st July 2022. For 3 months, Mr. M is holding rupees 2,50,000 as capital. So this capital is to be 8% is to be calculated, and that is for only 3 months. So the interest on capital is 5,000. For 3 months it works out to 5,000. And from 1st July 2022 to 31st March 2023, he has altered his capital to 2 lakhs. So 2 lakhs, 8%, 9 months it is 12,000. So Mr. M's capital, therefore Mr. M's interest capital as on 31st March 2023 is, we have to add both these values, that is rupees 5,000 plus rupees 12,000, it is rupees 17,000. That is by adding this for 3 months of duration it is 5,000 and here it is 12,000. So adding it you get it as 17,000. And now we want to calculate the interest on capital for Mr. N. We will just for time saving purpose, I am copying the same thing and I am changing the few details alone. For N, again, initially he was holding an interest on capital of he was holding a capital of 1,50,000. So 1,50,000, 8% interest on capital, it works out to rupees 3,000. And again on 1st July to 31st March, he has raised his capital from 1,50,000 to 2 lakhs. So for 9 months, again it stands the same. So N's interest on capital is 3,000 plus 12,000. It works out to 15,000. Next question. Here we are given with the question details about the drawings made at different durations. And we are given with the interest on drawings. Interest on drawings is given as 15%. Interest on drawings is given as 15%, and we are asked to estimate the interest chargeable. What is the interest chargeable when this person drawn the money from the firm at different durations? The question details, what we will do is we will prepare a table and we are going to solve this question in two methods. First is the simple method, and we will make a table for the given question details. Date of drawings and amount, it is to be recorded in rupees, and number of months from up to 31st March, number of months up to 31st March. Then interest we will be calculating. Interest at the rate of 15%. We are rewriting the question details. The first draft is on 1st May. First drawings was made on 1st May 2022. Then next was 1st August 2022. Then 30th September 2022. Then next drawings. Then next drawings is 31st Jan 2023. And then 31st March 2023. And we are given with the amount. The amount values are 20,000 first drawings, then next is 50,000, then 30,000, then 60,000 we are drawing, then 40,000. Now we have to estimate the duration, that is from 1st May to 31st March. It is 11 months. Likewise from 1st August to 31st March, it is 8 months. The duration is needed to calculate the interest, 8 months. Then from 30th September to 31st March, it is 6 months. Then from 31st January to 31st March, it is 2 months. And the close end, 31st March, we don't have, it is exactly made on the last day of the month. So we have estimated the duration. Now calculating the interest on capital for 1st May 2022. The interest on capital, the amount drawn is 50,000. The rate of interest is 15% and it is for 11 months. I have already pre-estimated the value for time saving purpose. So it is rupees 2,750. Rupees 2,750. Likewise for the following months. For 1st August 2022, the amount of drawings is this is 20,000, and for the 1st August is 50,000. It is again 15% for 8 months. So it works out to rupees 5,000. So I'm recording, once I'm calculating the interest, I'm recording in the table 5,000. Then next for 30th September 2022, the amount of drawings is 30,000 and it is 15%, and this is for 6 months. So 6 by 12, it works out to rupees 2,250. I am recording, as I am calculating the values, I am recording in the table 2,250. And for 31st Jan 2023, the amount withdrawn is 60,000 for 15% interest for 2 months. It is rupees 1,500. Rupees 1,500. And the last 31st March, for 31st March 2023, it is the amount of withdrawal is 40,000. It is 15%, but 0 month. We don't have any interest for this drawing, so it is, the amount is only 0. And when I am adding all the interest, that is the total interest chargeable in this case is rupees 11,500. The total interest chargeable is 11,500. This is how the interest is to be calculated on simple method. Now we will calculate this in another method, by product method. For time saving purpose, I have just copied down the table. The first column, second column and third column remains the same, whereas the last column alone there is a change. What we will be doing is, for the last column, the product, we have to calculate the product, that is the multiplication of the second column and the third column. So it is rupees 2,20,000, rupees 4 lakhs, and rupees 4 lakhs, and rupees 1,80,000, and rupees 1,20,000, and here the product becomes 0. So this person's total drawings for this financial year is 9,20,000. Now we have to calculate the interest on drawings through product method. Interest on drawings for the total year, it is rupees 9,20,000 for 15%, and it is to be divided by 1 by 12, and you will end up with the same interest on capital what you have arrived in the simple method. Next question. Here we are given with a situation that a partner draws rupees 10,000 per month, and we are asked to estimate the interest on drawings of the partner, and 3 situations are given. That is, if the partner is going to draw the money regularly in the beginning of every month, or if he is going to withdraw the money in the middle of the every month, or if he is going to withdraw the money at the end of the every month. In 3 situations, what is the interest on drawings we are asked to calculate? Yes. Now for this we will be applying a formula. We have already discussed in our previous video about the formulas related to calculation of interest on drawings. The interest on drawings formula is total drawings into rate of interest into, if it is beginning of the month, when it is beginning of the month, it is going to be beginning of the month, it is going to be 13 divided by 24. Now total drawings, this person withdraws rupees 10,000 per month. So for 12 months into, the rate of interest is 15 percentage, that is 15 divided by 100 into 13 divided by 24. This is an formula component. So it is rupees 9,750, the first case. The second situation is if the drawings is going to be in the middle of the month. The partner is going to withdraw during middle of the month, and what it is. The all things remain same. Only one part of the formula changes. That is, if it is going to be middle of the month, it is 6 by 12. All other components are same. I am just copying down and making the changes so that you can better understand where the changes actually happening. The total drawings, rate of interest, everything remains same. Here it is 6 divided by 12. So it is rupees 9,000. And the third situation is what happens if the money is drawn at the end of the month. Every month at the end of the month the person is drawing. Again I am copying down the same workings and making a small change in the formula part. That is, if it is going to be end of the month, it is 11 divided by 24. So it is 11 divided by 24. So I have already pre-estimated the values for the reason of saving the time. So 8,250. So the interest on drawings is calculated based on these formulas. Yes. Next question. Here we are asked to estimate the interest on drawings. Here the drawings is made by the partner on quarterly basis. That is, beginning of each quarter, end of each quarter, and middle of each quarter the partner withdraws money. The formula component is same almost what we have calculated for the monthly basis. That is, total drawings into rate of interest into the changing part is 15 divided by 24. Whenever the amount is drawn at the beginning of each quarter, it is the formula part is 15 by 24. So the total drawings, the amount withdrawn is 60,000 per quarter. So into 4 quarters, rate of interest is 10%. So 10 by 100 into 15 divided by 24. The rate of interest is 15,000. The next case is amount is withdrawn at the end of each quarter. I am just copying down the same calculations to tell you where the formula actually changes. When it is end of each quarter, it is instead of 15 by 24, here it is 9 by 24. So all other part remains same. So 9 by 24, the formula, the value of interest on capital is 9,000. In the next situation, the amount is withdrawn during the middle of each quarter. Here the amount changes to 90,000, and when it is middle of each quarter, it is 6 by 12. So the interest on drawings is 18,000. This is how the interest on drawings is calculated when the amount is drawn at the beginning, end and middle of each quarter. Next question. Here in this question we are asked to calculate the interest on drawings for 3 partners A, B and C. They have withdrawn the money for 6 months starting from 1st October to 31st March. That is during the second half of the financial year. And let us break down the question details. A, B, C are ABC are partners. They started withdrawing from 1st October, and A withdraws in the beginning of the month, B withdraws in the end of the month, C withdraws in the middle of the month. The point to be noted is they have withdrawn the money for 6 months, and it is in the second half of the financial year, that is from October to 31st March. Now we will calculate the interest on drawings. As usual, total drawings into rate of interest into 7 divided by 24. This is the formula for calculating the interest on drawings for 6 months, which is drawn at the second half of the financial year, that is last 6 months. Here the amount is drawn as 4,000 per month. So they have withdrawn for 6 months. So we multiply it by 6, and the rate of interest given in the question is 5%. So into 5 by 100, and the formula for this is to be multiplied with 7 into 7 divided by 24, which is rupees 350. Likewise, here B withdraws regularly at the end of every month. The next case is end of every month. So I am copying down the same workings, and I will make a small changes. This will help you to note down what is the changes in the formula. So here it is end of the month, means it is 5 by 24. The value already I have calculated, it is 250. Then for partner C, this person has withdrawn the money at the middle of the every month. Middle of every month he has withdrawn. Again the small change in the formula is, here it is 3 divided by 12. So all other things remain same. 3 divided by 12, the interest is rupees 300. So interest on drawings, which is drawn for 6 months and during the last 6 months of the financial year, that is second half of the financial year, from October to 31st March. These formulas are to be applied to find out the interest on drawings. Okay students, let us continue few more practical problems in this chapter in our next video. Your like, share, comment and subscription to channel may encourage me to post more videos in accountancy and other subjects. Thanks for watching.